Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 16th of June, and a bit of decent movement here on the FTSE after 2 or 3 weeks in the wilderness, i.e. not really doing very much. Still between the 50 and 200-day moving averages, so the 200-day line around 75.30, 50-day moving average around 77.20. We've just about to break a line of resistance from April. That's around, let's say, current levels. End of day close above that, and we're hopefully heading for at least 7,800, the May resistance, and then ideally by the end of next month through to the 8,000 zone. However, unlikely that may appear. The 200-day line and the 50-day lines are both rising, and we've pushed back above neutral RSI 50 for the first time since the beginning of last month, so it looks as though things are on the move. Anything above 76.30 now probably taken as a positive, given that we'd be back above the initial April support. Moving along to the DAX, which was rising anyway ahead of the Fed and other interest rate factors. Here we're through the, basically through the old May resistance, 16,300, looking for further progress towards the top of that rising trend channel from September, as high as 17,200 by the end of next month. At the moment, the lowest we're thinking this market may dip to is around 15,900 at the rising 50-day moving average level. On to the Dow, where hopes were high that this would be the time when we have a break to the upside through the April resistance line from last year, and finally done it after a bit of jiggery pokery. First time was the bull trap in May, and then we also had one just in the last week. But initial target here, 34,800 at a March resistance line projection. Big target here over the course of the summer, hopefully up to 37,000, and the top of that August rising trend channel from last year. On the downside, not expecting anything worse now than the 50-day moving average, around 33,600. On to Bitcoin, which is, I suppose, the unfortunate one over here. Here we've had a test of the old August to February resistance. That became new support. Still have the risk of a move down to the 200-day line and the uptrend line there from December around 23,500, but hopefully we'll get away with staying above 25,000, and then eventually after the next maybe a week or two, breaking the 50-day line and an April resistance line, 27,200, and then heading back towards the 30,000 zone. But RSI still well below neutral 50 at 40, so there may be a bit of a waiting game there for the bulls. On to the stocks, and quite a motley collection today. There are not too many big rises, but quite a few interesting charts, and so a bit of a TA lesson today. First one is ASOS, where we had bullish divergence going into this month, but still lower lows, marginally lower lows below the 330 zone. What's of interest here is the unfilled gap to the upside yesterday, breaking that falling wedge that we had from the beginning of last month, and certainly above yesterday's low around 360 pence. We're looking for the shares to fill the gap up towards the £5 area, however unlikely that might be. There is obviously initial June resistance there at 403, so that might be an initial target for people to look at. But the bullish divergence and then the gap, bear trap gap reversal, does suggest that ASOS is back in business with or without any M&A on the horizon. Moving on to Audioboom, where things are looking a little bit brighter after one of the worst bear runs that one's had in the market. Here we've got a break of that resistance line there from March, the break level around the 280 zone, and above that we're looking for the 50-day moving average as high as 340 pence. Even if the shares then fail after that, you can see that we had a 50-day line failure in March, or a couple of them in fact, and in the recent past, any time we've broken through the 50-day line, that's been a sell point, but at least we may get up to the 50-day line area. If you are cautious, you wait for the RSI to break above the neutral 50 level versus 43 at the moment. The last time we were above the RSI 50 level in a meaningful way was back in basically the end of February, so it's been a pretty dire bear run there for Audioboom. On to Altyn, which is a rather happier picture, I would say. Here we've Already had a couple of gaps up through the resistance line there from April. Above that line, around 114 pence. We're basically looking for the shares to retest last month's resistance around 135 pence, hopefully by the end of this month. Bullish divergence line there as well, so that also adds momentum and gives credibility to the idea of a move higher. Gap to fill there up towards 130 anyway, so hopefully the shares will do that. Onto a stock which has also got a big gap on the daily chart, Aston Martin. Here you can see that we had a gap through the 50-day line. We held the gap. We held above previous resistance around the 245 pence level, and now we've broken May resistance around the 290 level, above 290, looking for the top of that rising trend channel from back in August last year as high as £3.50. And as I said, the unfilled gap to the upside and the consolidation above it, a pretty strong signal, uncharacteristically for Aston Martin. Maybe on to a stock which has been one of the best performers of the last few weeks, Acutiy, despite the name change. Here we've got a bull flag here. It looks like we're ready to conquer the 10 pence level, hopefully over the next session or two. Above that, we're looking for 14 pence by the end of next month. We've got the 50 and 200-day moving averages both rising, so that is quite encouraging at the moment, and we're looking for 14 pence, at least while we hold above that 200-day line at 8 pence. On to Avacta, which is hopefully bumping along the bottom. Here, falling wedge is a sort of situation which is reminiscent of the ASOS position, falling wedge there, but we need to break out of that wedge around 107. If we can do that, then we're looking for at least a retest of this month's resistance and the 50-day moving average around £1.17, hopefully by the end of this month. More low-profile stock in the form of Creo, but here the shares did deliver a very decent turnaround, breaking that line of resistance from March, and it's been basically up, or at least sideways or up all the way, looking for 42 pence by the end of next month, or perhaps even sooner, backed by an uptrend line in the RSI window. On to Clontarf, which is also looking encouraging. We've obviously had one attempt to break higher, still above the 50-day line, and that's the main reason we're covering the shares today, so that's pretty encouraging. That's around 0.12 pence. Above that, looking for as high as 0.22 by the end of next month. If you're cautious, you're waiting for a break of that resistance line, wherever it may actually be. I suppose you could argue it's actually up at 0.15, but really going by the 50-day line here is the trigger point, not that resistance line. Moving along to Challenger Energy, another stock which is trying to get its act together at the moment. Here we've got a line of resistance from February. I want to clear that at around 10.5. If we can do that, then it's up to as high as 0.14, 0.15 by the end of next month. But the way the shares are maintaining largely above the 50-day line, quite encouraging, and we're above RSI 50 as well. On to Empyrean, which is a requested stock. Here we've got a falling trend channel from the turn of the year, the floor of the channel there around 0.78. Above that, we're looking for the top of the range and the top of the channel, as high as 1.35 pence over the next couple of months, so maybe going into August for that, depending on, obviously, whether any momentum gathers at these levels, and we don't really want to see south of 0.8 anytime soon. Edenville had its news. I'm not quite sure whether it's shook it yet or not, but pushing through the 200-day line at the moment, 8.4 pence. Above that, we were looking for as high as 10 pence at that December resistance line projection. Big picture target here over the next 1 to 2 months as high as 16 pence. So maybe August, that sort of time frame. And hoping that the shares will remain above 7.25 pence. Recent support for the shares. Filtronic gets the odd mention here on the bulletin board heroes. Here you can see that we've got a break of that trend line there from back in July. We've also got the 50 and 200-day moving averages rising, which is perhaps more important at the moment. And the longer we stay above the 200-day line at 12.5, the sooner we should hit the top of that rising trend channel from last year, up to 18 pence, or ideally by the end of next month. On to Genedrive, which had some news today, which seemed to be quite encouraging. Here we've got a falling trend channel. We bounced off that trend channel from the beginning of the year. That's around 16.5 pence. Looking for 25 pence by the end of next month, especially if we can get a quick break of that 50-day line around 21 pence. Last three now. First one is one of the more difficult stocks to chart, probably along the lines or degree of difficulty that we have in Avacta. Here the points to note with THG is that, the top of that gap there from last month is at 74 pence, so we'd like to see an end of day close above that. If we get that, then it could be up to that resistance line projection from January at 84 pence over the next 2 to 3 weeks. The other point to note is that we are just about to break an RSI resistance line, which is a new or unusual way of looking at it, but if we break that and the RSI goes to 57 plus, that can add momentum to this situation. And we want to stay on the right side of the mid-May resistance around 65 pence ahead of a potential move to 84. But that already has been a very difficult market, and the rug pull in May particularly painful, one would say. On to Union Jack, which is slowly but surely heading up to the technical target that we were looking for, 32 pence. So we're just less than a couple of pence away from that now. So hopefully we'll get that over the next week or two. If you're a fan of the shares and looking for greater glory, then I suppose the next obvious level would be up to 36 or 37 pence by the end of next month. And above that, one would be hoping that there'll be something of the type of spike that we had last September. But 32 and then 37 pence probably on the cards there for Union Jack Oil. Finishing off with Vast, where I think there's a stake builder in the house. Here we've got basically a range trading situation. Bear trap in March below the 200-day line, and in April as well, and now one in June. So it looks as though any dips towards or below the 200-day line are buying opportunities. Still looking for a return to the top of the range at 0.8 pence. And if you're cautious, maybe wait for the RSI to break above neutral 50 versus 43 at the moment before you're confident enough to look for the top of the range again. That's it from me today. More updates over the weekend.